What is up everyone, welcome back to yet another exciting video, and today we're going to be talking about the importance of order blocks. In this video I'm going to be explaining what order blocks are and whether they are reliable and how to properly trade them. Now, an order block is a significant level of demand for a security or stock that results in a price change, usually an increase. Order blocks are formed when large traders or investors place orders for a large quantities of security at a specific price level. And as for whether they are reliable or not, their reliability depends on the market and security in question. Order blocks can provide important information about the market sentiment and the supply and demand for a particular security. However, they are not always a reliable indicator of future price movements, as they are influenced by various factors such as news events or market manipulation. It's important to keep in mind that order blocks should not be the sole basis of investment decisions, and that a thorough analysis of market conditions and the underlying fundamentals of a security is necessary to make informed investment decisions. I want us to actually look at what price did the previous week and how we could have used order blocks to actually catch big moves within the market. The most important thing that you have to understand about order blocks is that we're trying to catch corrective moves to continue with the market. So if the market was pushing in an uptrend, we want to continue with the market and continue making highs and breaking highs. When the market is moving in a downtrend, we want the market to continue pushing to the downside and trying to catch corrective moves moving in that direction. So when we're looking for a bullish order block, we want the market actually pushing to the downside, giving us a corrective move. And after that, we're going to be looking at the last bearish candle that was engulfed by this candle right here. So we're going to be connecting this candle from wick to wick and then stretching it out like this and waiting for the market to actually push all the way to the upside. And once the market pushed all the way to the upside, we want the market to come back to the downside. And when it comes to this level, it would be making a corrective move. Once it gets to this level, we want the market to change in character and start pushing all the way to the upside. So when the market actually starts pushing all the way to our order block, we want it to come to this zone right here. And once it gets to this zone right here, we want to continue pushing with the market. We want the market to change in character so that we can continue pushing all the way to the upside. In a bearish order block, we also want to catch corrective moves pushing all the way to the downside. Remember, we're trying to move with the market. We're not trying to move against the market. So if the market is pushing to the downside, we want to push with the market to the downside. So in a bearish order block, we would want a small bullish candle that was engulfed by a big bearish candle, this red candle right here. And then we're going to be connecting from wick to wick and stretching it out like this and waiting for the market to push all the way to the downside and waiting for that nice corrective move. So when the market actually starts correcting and pushing to our zone, that's when we're going to look at the nature of the market. If the market is making higher highs and higher lows pushing all the way to our zone, we would want the market to start indicating that it wants to push to the downside. So once it gets to the zone right here, we want the market to start slowing in momentum and start pushing all the way to the downside. And this is how you identify order blocks within the market and how you trade them. But let's look at a real chart to see what actually happened this past week and how you could have caught big moves using the smart money concept by identifying order blocks within the market. Now, the best way to really know what the market actually did within the week is for us to start on the weekly chart to look at what the market was actually doing. When we look at GBP AUD, we can clearly see that the market was pushing in an uptrend right here. It came to this level right here and there was a slight pause, meaning that the market wanted to start reversing because it couldn't keep breaking its highs anymore. And that's when it started pushing all the way to the downside. When we pay attention to what happened right here, we can clearly see that the market was starting to break structure. And this is the candle that we're going to be focusing on. After this break of structure to the downside, we know that the market wants to start pushing to the downside. And remember, with the smart money concept, we want to move with the market. When the market wants to start moving to the downside or start pushing to the downside, we want to wait for corrective moves to continue pushing with the market to the downside. So what we're going to be doing from here is that we're going to be switching to a smaller time frame like our daily chart. We can clearly see that the market actually broke this low right here. When I stretch out this zone, we can clearly see that the market broke this level right here, implying that it wants to continue pushing all the way to the downside. What we do from then is that we wait for the market to make a corrective move. So there's a push and exhaustion. So this was a push, exhaustion, push. We wait for another exhaustion before we're going to start pushing with the market to the downside. Our next task is to hop onto even smaller time frames to identify our order block where the market was likely going to be reversing or touching before it starts pushing to the downside and pushing with the market to the downside. So let's look at the 4-hour chart and see what the market did. The market actually started pushing all the way to the downside, and when it started pushing up, this would then be when you identify your order block and wait for the market to come to that zone. Once it gets to that zone, that's when you're going to start preparing yourselves to push all the way to the downside. What I would then do is that I would switch to an even smaller time frame and look at the market structure. Here we can clearly see that the market was making higher highs and higher lows, pushing all the way to the upside. And when it came to this order block right here, there was a slight pause. It made this huge candle right here, pushing all the way to the upside, and it started pushing all the way to the downside. Another trick that can actually help you know when the market is actually going to start reversing is that when the market is pushing to the upside, you usually see big bullish candles. So when the market is pushing to the upside, you're going to notice that the market is actually making big bullish candles, and the bearish candles are usually small in size. When the candles are getting smaller and smaller in size, that means that the market is actually pushing in a very strong uptrend. But when the market is starting to push to the downside, that's when you're going to realize that you either see no bullish candles anymore, or the bullish candles are getting smaller and the bearish candles are getting bigger and bigger. When we look at what happened right here, the market pushed to our zone right here and it started making huge bearish candles, implying that the market is pushing in a very strong downtrend. Look at these small bullish candles right here, but in comparison to these big bearish candles, implying that the market is actually pushing to the downside. The other trick that you can use is that when the market is making higher highs, pushing all the way to the downside, you're going to realize that the market is not making higher highs anymore. It's starting to break structure, and that is an indication that the market is going to start pushing all the way to the downside. When the market actually broke the structure right here, implying that it wants to continue pushing all the way to the downside, this is when you would actually start preparing yourselves to push all the way to the downside. And this would have been a nice trade to push all the way to the downside. And this is how you could have called a sell on GBP AUD. Let's look at a different pair and see what the market actually did and how you could have used the smart money concept, specifically using order blocks to catch corrective moves and move with the market in your projected direction. The next pair that we're going to be looking at is CAD JPY. And when we look at CAD JPY, we can clearly see that the market was making higher highs and higher lows. It was moving in an uptrend. When I draw a line like this, you can clearly see that the market was actually pushing in an uptrend, but we're not going to be using lines. When the market made higher highs and higher lows, it started pushing all the way to the downside to this zone right here. And when we hop onto the daily chart, we can clearly see that the market was making lower lows and lower highs, pushing all the way to the downside. This is a corrective move, by the way. When we look at a bigger chart, you can clearly see that the market was making push, correction, push, correction. It pushed with this big movement right here, and it came back for this corrective move. And there is a chance that the market would actually continue pushing all the way to the, but let's look at the daily chart to see what happened right there. The market started pushing all the way to the downside, making lower lows and lower highs, implying that this is a tiny, small downtrend in a big uptrend. When the market actually came to the zone right here, it started slowing in momentum, meaning that it couldn't keep breaking its lows anymore. And that is an indication that the market usually wants to start pushing all the way to the upside. But for us to build interest in trying to trade this pair pushing all the way to the upside, we would want the market to start breaking structure and indicating that it wants to push to the upside. When we zoom in to see what happened right there, like I said, we see lower lows and lower highs. The market is pushing to the downside. And when it came to this level right here, it started slowing down, and it made a huge impulsive move right there. We know that after a huge impulsive move, we usually see a corrective move to continue pushing all the way to the upside. When I switch to, let's look at a smaller time frame. When I switch to an H1, we can clearly see that the market started pushing all the way to the downside, pushed all the way up, and when it made this corrective move, this whole thing right here, this whole pause right here was a corrective move before the market was going to start pushing all the way to the upside. And I want us to look at what happened right here. Remember, when we want to identify our order blocks, we look at our higher lows. So when I look at what happened right here, I can clearly see that there is an order block right here. And when I connect my candles and stretch it out like that, you can clearly see that the market actually pushed all the way to the upside. It started ranging in this zone right here, but it pushed all the way to my order block right here. It could have come either to this level, but it actually came to this level right here. And when it started pushing all the way to this level, that's when the market started pushing all the way to the upside. So this is the exact example that I gave earlier, that you want to connect the wicks of the candle, wait for the market to come to the zone, and look at how the market actually reacts when it comes to the zone. And that's when you're going to start preparing yourselves to either go to the upside or to the downside, depending on the type of order block that you're going to be seeing within the market. Let's look at the last pair to see what actually happened and how you could have used an order blocks to actually trade the market to move in your projected direction. Next, I want us to actually look at what happened to gold. When I switched to the weekly chart, immediately what I saw was that the market was actually pushing in a downtrend, but when it started pushing all the way to the upside, it came to this order block right here, and there was a possibility that the market was going to reverse and start pushing all the way to the downside. But remember, I always say that just because the market is at an order block does not guarantee that the market is going to start reversing and pushing to the downside. You have to use other indications that the market is actually going to start preparing pushes to the downside. So when the market started making higher highs and higher lows, it pushed all the way to the zone right here, and the prediction was that the market was actually going to reverse when it gets to this level right here. But let's look at smaller time frames to see what we see right there and what indications we could have used to confirm that the market is actually going to start pushing all the way to the downside. Like I said, the market was making pushes to the upside, higher highs and higher lows, pushing all the way to the zone right here, and it couldn't keep breaking its highs. So you can clearly see that from right here, the market was breaking its highs, pushing all the way to the upside. It was breaking its highs, pushing all the way to the upside. It even broke this high right here, and it continued pushing all the way to the upside. When we switch to smaller time frames, you can clearly see that the market is breaking highs, pushing all the way to the upside, breaking highs, and all of a sudden we can clearly see that the market actually broke these lows right here. When the market actually started breaking these lows, this was an indication that the market actually wants to push to the downside. And when the market actually starts breaking its lows instead of its highs anymore, that is a good indication that you should start preparing yourselves to push all the way to the downside. So after this break right here, we wait for the market to push all the way to the upside, and when it gets to this top part right here, this is when we're going to be looking for ourselves to start pushing all the way to the downside. Another confirmation that you can always use is to also look at how the market is moving on smaller time frames. So if it's making higher highs and higher lows, you want the market to start reversing and making lower lows and lower highs. Another indication that I showed you guys was that when the market is moving in a strong uptrend, usually look at the formation of the candles. The bullish candles are usually going to be bigger and the bearish candles are going to be smaller, indicating that the market is moving in a very strong uptrend. What we see right here is that we see very tiny bearish candles, but all of a sudden we started seeing big bearish candles and very small bullish candles. And this is your indication that the market is actually going to reverse and start pushing all the way to the downside, because we see strong bearish candles and very small or tiny bullish candles. And this is then when you would actually start preparing yourselves and push to the downside. We can clearly see that gold pushed to the downside. We identified our strong order block on our weekly chart, but just because it's on a weekly chart does not guarantee that the market was going to continue pushing all the way to the downside. We had to hop onto smaller time frames to see if the market is going to confirm our projection to push to the downside, and it did confirm our projection. The market actually came to our zone right here. It started changing in character, and that's when it started pushing all the way to the downside. I hope you guys enjoyed this video. If you did, please do make sure that you hit the thumbs up, subscribe if you didn't, and comment any questions that you might have in the comment section. I am more than happy to answer your questions.